Hey traders, this is Cousin Benny coming to you on Thursday, May 26th with an educational video on trading Sprint. Many of you are aware and have asked what I look at when I'm trading Sprint, so that's what we're going to go through right now. I typically use the stochastics, trend lines, EMAs, and patterns to determine good entry points and exit points, as well as how to stay into a trade, where I use the EMAs, the short-term EMAs, and the Bollinger Bands. Okay, so this is Sprint on a daily going back to June of 2010, where this channel was formed, and we traded this cyclical pattern where stochastics got oversold and overbought, oversold and overbought. Okay, so lately I have been trading this off the 20 EMA because we broke out of this downward or descending channel and started a new trend, which namely was an uptrend. Okay, basically if you just draw a line through the middle of the action, you can see we're in an uptrend. So this green arrow depicts my first entry point on this retest of this descending channel. Okay, if you extend this out, when we got up here and moved back down, this is the second point high probability setup on a descending channel or descending wedge. This is the highest probability and the first setup that you get, lower trend line and oversold stochastics. Okay, when those stochastics turn up, that's where you enter at this point. In this case, we've already traded this channel, and now I'm trading the second high probability setup, which is the retest of the upper channel line. Okay, oversold stochastics, and we traded this. And what I was watching now was the 20 EMA daily. Now, I didn't trade options on this only because it's a cheap stock, and it's like an option basically in that the cost is minimal and the downside risk is fairly limited. Okay, so now what I was watching was the Bollinger Bands. Okay, came down and retested. Notice the Bollinger Bands turn up, they start to compress. It's telling me the price isn't going to move that quickly, so I'm trading that with this in mind, and I had about 2,000 shares on this particular trade. It wasn't until we got over here that I started trading larger lots because Sprint had become pretty predictable. If we move up, we'd come back down to the 50 EMA, we'd come up, we'd test the 20, we'd come up, we'd cruise back down, test the 20, and as of late, this is my current entry, was this. I was watching these two candles here and this down candle, how it reacted at the 20 EMA. Once we got this closing candle above the 8 EMA, that was a clear signal. I'd already gotten in on this candle, and we traded this up. We traded this to this high on this candle here. On Wednesday or Tuesday we got out, and subsequently I've been trading inside these intraday candles. So those last two candles, what I was doing was trading intraday, and when we got an opening price action above the 8 EMA, using Kaniko's strategy, which is once the 8 EMA pushes above the 200 EMA, the red line, that gives you a buy signal. Okay, and we held above the 8 EMA and the 200 EMA, and we kept testing the 20. So that kept me in this trade pretty much all the way up here until we got out on Tuesday, as I was saying, on this high candle here. Alright, so I waited a day, which is generally my rule, and I got back in, I believe, on Wednesday on the low of the day. Now here's another thing to consider. Typically the first half an hour of the trade, I watch the opening range, and if we trade up above the opening range, that tends to be bullish. Down below the opening range, that tends to be bearish. and I follow that accordingly. So the first hour or so in sprint, I kept my eye on price action, and once I saw this low here, I started to nibble again. I got into 500 shares, and I added 500 once we got over the 20 EMA and the 8 EMA. Okay, I got out on the high of the day when prices started to move back off and close through the 8 EMA. I got out the last half of my position. I exited half here. So again, on the following day, today, I got in on the low of the day and started the position and added to the position once we got above the 8 EMA, and got out towards the high of the day when I started to see price action starting to get not going any higher. The momentum was starting to decrease, and I started to notice that the stochastics was getting ready to turn over. Okay, so that's where I got out here towards the end of the day on Thursday. Okay, so that's sprint. Now GT, I traded the same way I did with sprint. Okay, we traded GT in this descending channel wedge, and we got in on lower trend lines and out at upper trend lines. Okay, we got back in on this lower trend line, stochastics oversold, and we got back out towards the close to 200 EMA, where price turned down and we got a sell signal on stochastics. Now again, with like sprint, the second entry point high probability setup is retest of this upper trend line, which is where I got in. Now many of you noticed, for you newer traders, you may have not been with us long enough to know that I traded this upward ascending channel as well on GT, where I would buy the 20 EMA if it didn't break down, and I would stay in the trade if the 20 EMA didn't break down. If it did, typically I would get out once we moved down through the 8 EMA. Okay, once we broke back above the 8 EMA, I would get back into the trade, and I would trade towards the upper end of this channel and get out. Okay, over stochastic. So many of you noticed that I would get in 1,000 shares at a time and scalp this intraday. For your newer traders, if you have if you have less than 25,000 in your portfolio, what I would recommend is save 2 to 3 trades per week that you know you're going to scalp, and only use your 3 day trades during the week on those particular positions. Okay, you could have done that on GT very easily each day. Okay, you could have traded it 3 times during the week and made nice profits. Okay, so GT, we had earnings on this candle, this break up here, and we've traded sideways since. I'm looking for this to break above the 20 EMA. Notice the Bollinger Bands are compressing, stochastics are oversold. I'm probably going to take this, maybe not tomorrow, maybe I'll get in small tomorrow and swing this over the weekend, unless we get a break back up to the 19 level, in which case I'll take $1.50 on 1,000 shares. Okay. Now with regard to GT, you could also trade the options here. We've done that as well. Notice on GT we have the stochastics, we have MACD turning up, we have the 50 EMA down below us keeping us in the trade, and we have an ascending channel that we can trade the top and bottom bands, okay, or top and bottom trend line. Now Patriot Coal, we traded over the last 1, 2, 3, 4, 5, 6, 7, 8 trading days. Okay. Now with Patriot, I traded options, and what I was looking for was this channel. Okay. We saw that we were starting to get this action moving down to the 200 EMA, and we were looking for a bounce at this lower trend line. We had an EMA, a trend line, we had oversold stochastics, and we had a pattern. Okay, so that's what we're looking at. Now at this first bounce to the lower trend line, what I was looking for was oversold stochastics, and we entered this trade with the 2250s, which were out of the money at the time, but the delta was 50, and for every dollar move we got 50 cents basically on the options. So we got in this when the stochastics gave us a signal. Let's zoom into the 17th and look at this a little closer. Okay, we got the signal here at the open, and we bought the 2250s. We quickly moved back down, but we didn't get down to our stop, so we stayed with the trade. When it traded above the 8 EMA, we added, continued to watch this trade, and held it into the following day as a swing because we were looking at 23, which was the 100 EMA at the time, as our target. Okay, we got that signal the following day where we traded up to the 100 EMA, and this is where we moved up and we backed off of that point. Okay, so that was a good trade. We got out in 2 days and we made a nice profit on that. So at 23, I said I was going to wait. It looked like this channel was forming on a short-term basis, and that we'd be possibly moving down and creating a double bottom and a retrace of the stochastics, which is a nice second entry point and a high probability case in this particular circumstance, because we had EMAs up above us and we knew that we'd have some resistance. So when we got back down to the lower trend line, stochastics was oversold. We got in on the trade yesterday, 2250s, and we held for 2 days. And today we got out when we started to see momentum slow up on the 15-minute towards the end of the day. Okay, we got out here. Now, RAX is a trade we held for several days and entered similarly. We entered on a lower trend line. I was watching this 50 EMA. I was a little surprised that we moved down through it, but the action didn't shake us out of the trade. We had this lower trend line that goes out a ways. Okay, we had 2 points here that established the trend. We extended that out, and we've started to get this downward price action. I drew in a pattern, and we entered on this candle right here. Okay, so we traded this up to the upper trend line. I took off some of these and waited till we moved back on this stochastics turn to get in again on this lower trend line. Okay, and all the while we were using our 8 EMA and our 20 to keep us in the trade and give us sell signals when we had price action moving lower. Okay, down through the 8 EMA. I took half of this off, and I still have half of this RAX trade on. So the 15-minute on RAX has kept us in this trade where we got to the upper trend line. We sold here. We waited till we got back down, and I should say we sold half of our position. We waited till we got back down to this lower trend line, a high probability location, and we got back in on this trade. Now, one of the things I've been following that Kaneko has brought up is very good, that when we cross the 50 EMA, he uses the 200 EMA, but I like to change that because I'm trading on a shorter time frame. When the 8 EMA moves up through the 50 EMA like it did here, that's a good entry point, an indication that a second entry point, and a good indication of further momentum to keep us in the trade. Okay, so that happened again here today. Once we got back in on this retrace of this lower trend line that extends out on the daily, we got back into this, and I decided to keep half of this on today and only exited half because I wanted to swing this a little further. I'm looking at the daily, and I'm watching this for a breakout to this upper trend line, which would be a nice trade if stochastics, it looks like stochastics has enough energy to get this moving higher. Okay, so that's RAX. EMC, a number of us have traded this, and we held patiently as this options trade continued to bounce around between the 20 and the 50 and this lower trend line. I exited my entire position today on this candle when we broke above the highs on Thursday, Wednesday, Tuesday, Monday, the highs on Friday. Okay, When I saw this poke above that, I exited my entire position, only because I was starting to take off positions. I entirely expect this to get to the upper trend line, up to the 29, 75, 30 level on EMC. So I may get back on this, but I won't do it probably until Tuesday next week. Okay, so this is Cousins Vinny coming to you from Day Trading Radio, where we trade options and common like I just outlined on a daily basis. Come and join us and take the 2-week free trial at Day Trading Radio, where you can come and join us for a 2-week free trial. Remember to take profits, and we'll talk to you in the room. And if I don't see you tomorrow, have a happy Memorial Day, and we'll see you on Tuesday. Take care.